Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, November 18th, 2025. So today was a little bit of a wild ride, but we traded it pretty well today. And one of the things that I was looking at, I mean, we've actually gone in the last 5 days from 68, 67, all the way down to 65, 70. So almost we have a 100 point drop in a pretty quick amount of time. But we had I think what a lot of people were looking at was the 50-day moving average. And when we broke through this support, it was more of a trap because this is support right here. So I kind of was on the side that we were going to get some kind of rebound. And if you look at the 60-minute chart, it actually we had some more, we had clear bullish divergences that were in place. You can see them on the stochastic momentum indicator here, that we had some decent divergences here. Price oscillator kind of went neutral on it, but in any case, when we were here, we started going long. Well, it was always a hedge trade, so we had the long and the short with IWM, and then when it went down further, we were able to close half of the short position and ride it up, and then just keep doing the same thing. And we ended up doing pretty well today. We made it was a little over $1,000, but again, a lot of it is the actual the quantum stocks that are still under some pressure, even though they were up some today. Overall, that's there, but with the fund hasn't really taken any kind of hit at all. So we've actually made money during this time that the stocks that we're in right now are down a lot, but we're able to ride those because those are our longer term positions, that are holdings that in a couple of years, you're going to have RGTI is going to probably be at $200, over 100, no doubt. So it's these, you're underwater a little bit right now, but the fund's not really taking any kind of hit. That's a good thing, because then if it keeps going lower, we keep buying them. That's it. We wanted to sell those when they went up 1,000% in a matter of a couple of months. You don't want to hang on to it, so we got into those a little bit early. But as I said, it's been nothing to the fund. It's kind of held us back from making more money. That's probably the best way to put it. So anyway, we found there was support right in this area. Are the lows in? Well, we don't really have true bullish divergences, so we could get a little bit of more of a retracement and then come down and test this 65.54 level. But I still think we're going to be coming down somewhere into this area, probably closing this gap right here. Into the 63.50, say. So, but it's going to be in this type of fashion. I don't expect it to be any kind. I do expect 1 week to be just a bloodbath, and I don't know what's going to be the rhyme or reason for it. But the only thing is that next week is when the bearish cycle is really supposed to kick in. So right now, I'm kind of on the side that we're going to get a bounce somewhere up into the 67.50 level. What they've been doing for the past few months is they literally squeeze the bears, and they make it up here in a matter of days, just like this. And I wouldn't expect anything different, but what I am expecting is we're going to make lower highs and lower lows, and we're going to come up to the next resistance, and from there head back down again. So if that's the case, that's going to play out. The next support that we need to keep an eye on is going to be right at the 65.50 level. And then below that, we have support. You can see right here. But I'm on the side that we're going to come down to the 23% retracement, 64.32. And if we go out to the daily, you can see that even if we come down, the 23% retracement is 64.32. I'm more on the side that we're going to test the 200-day moving average, 62.60, or possibly down to the 61.25, 61.50, which was the breakout. And that's what I showed you in the premium report, is often when we break out like this, we come back and test the support before heading higher again. So the bullish stand that I have has not changed. But the bearish cycle we're in is pretty much what's playing out, and a lot of it has to do with the the repo markets that are going on, because what happening is people, the large hedge funds and stuff, are finding it very hard to have any kind of margin because the overnight margins are going up. So the risk reward for them to leverage is not there. So then they're forced sellers, and that's pretty much why we've had this down market. So again, if we head down, we have support 65.50. Below that, then we're going to look at the 64.32. Those are our support levels. Because we have these bullish divergences, well, yes, again, we had them here, we got the bounce. We don't really have them here because you can see, but this is, I'm going to give you a couple things in one sentence here. So this is suggesting that we have another low coming, because this is not a bullish divergence, but this right here is an ABC, and you can see that we pretty much made it right to that area and bounce. So I wouldn't be surprised to see us have a little bit of a rally somewhere up into the 67.50 level before heading back down. But if we need to form some bullish divergences, what would happen is we take out these lows, find support at the 65.50, and then from there head up where you get the big the short squeeze on it. So that's pretty much could be it. Support's going to be 65.50. If the bulls can get it above the 66.70, anticipate that we're coming up into the 67.40, 67.50 area. On IWM, that was the best performer today. That was actually green. And when we were here and making this is where I suggested to do the 232 call, 233, I meant 233 call, 231, 232 put. And we went up and then came down. This is where this is right here. We took half of it off when we were here. And when it came back down again, this is where we went with the 232s. So we did pretty well. Like I said, we made about $1,000, but overall, it was not really that hard of a trading day because we were leaning on the long side. So for the bulls, they really got to defend this 233 level. If they lose it, then we're going to come down to the 232. If they can get above the 234.85 level, anticipate we're coming up to the 236, possibly even the 237 level. So let's see what plays out tomorrow. Enjoy the rest of your night, and I'll talk to you guys in the morning.